Okay. 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 They won't give it to me. Okay, here. If you want to take a screenshot or want to take a picture, you can, okay? You just, you feel free to take it. So in left side is the amount that's income that including T1, okay? The amount including in income that on left side is the amount is not including income, okay? So first thing we need to take a look. We need to take a look the income is including T1. So the income from office or employment. So that's employment income, right? The income from business or property. So the income from business is self-employment income, and from property is investment income. Okay, then the capital gain. So what capital gain? Capital gain is when you sell your real estate property, when you sell your stock, you sell your share. Then if you make money, your sell price is more than your cost price. Okay, your purchase price and your cost. That means you sell. Your sell price is more than your cost. Then you get the capital gain. We call it capital gain. And we're going to learn that that investment income. So you will know what is capital gain. Then the other resource from income, such as specified by Income Tax Act, the pension income, okay, benefit. So the pension benefit and the universal child care benefit. So universal child benefit is they stopped. I think there's in 2014 or something before that. Before Trudeau in power. And that's conservative. So the Conservative Party, when the Conservative Party in power, they just give every family is on universal child care benefit. So that's child care benefit is not regarding your family income, right? So that's almost every family. When you have a child under 16, then you get that money. Okay, but that money is taxable. You need to put in on you need to pay the tax. But now that's not existed. But why they put here is sometimes some people they still not claim that because they are not file tax. It's not file tax. They still can claim that the universal child care benefit. Okay. So the income. What is the income? So concept income is a periodical receipts from one's business, lands, work, and investment. Okay, any investment income, any working income, any business income, and the lands. So the lands is the lands is real estate, right? The lands income, they all called income. So these all the incomes we need including that. We need including our T1. Okay, I'm going to through you one by one. So the left I put later. That's not including income. I'm going to explain later. So the first thing we focus on the income. We focus on the income that must including your the income must including your T1. Okay, we focus on this one because we're learning how to do the tax return. So they just put 3 lines here, the 4 lines here. You see the income from employment income, then the income from business, property, the capital gain, or the other source income like a pension or something. The benefit like this one, they only put this one, but actually it's loss. Okay, actually in detail is loss. So the best thing is the best thing is we just look up T1, then we get a better idea. Okay, here it doesn't matter whose file is open because I'm not enter any number. When you enter number, you have to make sure, okay, which file is open. So now whose file is open? Tell me whose file is open on my side.
Aaron Smith.
So Aaron's open, okay? Aaron's open. So make sure when you enter, don't be rushed when you do the tax return. That's important. When you do the tax return, first thing is you need to know which file is open. Then you enter the number. You do the data entry. But otherwise, you got data entry is somebody else. That's mistake. Okay. So total income is on page 3. On page 3, okay, total income. So the total income is on page 3. So the line 1, we come to line 1, okay? I said line 1 is simplified line, and that's simplified. But officially, in Income Tax Act, or when you get NOA, or when you get some letter from CRA, they won't see line 1, okay? They only see 10100. That's the formal line number. Okay, the formal line number is 10100, not line 1. It's just for me. It's now I'm teaching. I said T1 line 1, so it's quick. Then I said 10100 is too much work for me. Okay, so the formal number is 10100. So when you see line, that's line 1, line 2, line 3, line 4, it's not including that side, right? This side 10105, 10120, 10130 is a little bit slide on the left. So that I tell you there's a little bit slide on here. That's lost, okay? Then 120, there's lots of line here. So as long as his line in this side is not calculated for your total income. It's a reference number. Okay, in here is a reference number. It's not calculated your total income. So the total income only line 1, 2, 3, 5 until line 48. Until line 30. Sorry, until line 30. So line 31, the formal number is 15000 is total income. Okay, the total income. So you will know if there's if the letter. So for me, I will say if the letter says 1500, start with 1 is income. Total income start with 1500. If it's 2 something, that's net income. It's 23400 is net income. You see, it's net income. Okay, then 3 something, 3 start with 3 something is credit. So this is the formal number. Okay, and the credit is here. the credit is 3 something. This is still deduction. Deduction is 2 something. So start with 300, 3 something is credit. Okay, so you will know 3. But for me, sometimes I said line 1. So you got familiar with line 1, but line 1 is only for me. Okay, for your letter, you got a letter from CRA, and you got a letter from even for the government. They will ask you, they will tell you line 1, 3 something, and line 2, 00 something. Okay, this is a formal number. Okay, so so that line 1. So if you read line 1 is employment income. So this employment income is only box 14. You see box 14 of all T4s. So that means line 1 is connect to box 14 T4. Okay. I think yeah, I think I just introduce this one later. Because there's somebody is not familiar with T4. Is anybody familiar with T4 or anybody not familiar with T4? Because I assume you guys is learning payroll. So are you familiar with T4? If you're not familiar with T4, then I just introduced T4 for you.
Yeah, we do know T4. We have knowledge of the T4.
You are familiar with T4, right?
Yes.
Yes. Everybody familiar with T4, so I'm not introduced T4. I believe you guys is do payroll for you're familiar with T4. So the T4 box 14, T4 box 14 is total income, right? So so this line 1 is only connect to box 14. Okay, box T4 14 T4 is only connect to T4. If you don't have a T4, then the number is not on line 1, okay, on something else. So this line, keep in your mind. So line 1 is only connect to box 14. Then this one is emergency. 10105 is tax exception for emergency service voluntary. So emergency service, they have, they have, I think they have 1,000 deduction. So then the commission is here 10120, and the wage loss is 10130. So if your wage loss, the wage loss replacement contribution. So wage loss replacement is a kind of insurance. So this insurance is different than WCB. Okay, it's different WCB. So WCB is when you work, when you get injured at work. But the wage loss is the people get sick. It doesn't matter they are at work or somewhere. It's only they get sick. If they get sick, they cannot come to work. Then they get money from that wage loss replacement. So the wage loss replacement is kind of insurance, right? So every year, you pay, the employer, they paid a wage loss premium, and the employee, they paid, the employee and the employer, they both paid wage loss, the premium. Then when that situation comes to some employee, they get sick, they cannot come to work, then they get payment from that plan. Okay, so these kind of wage loss plan, that's the wage loss plan. And I'm thinking, yeah, if you do the payroll, I'm thinking I need to introduce for you, but for business administration, I'm not introduce that for you. Okay, so for the wage loss plan, if we have a time today, then I will introduce to you. So because wage loss plan, they have 2 different methods. two different methods for a wage loss plan. One method is when the company pay that person, okay, the person is injured, they pay them, they could pay them including box 14. Okay, they could pay the box 14 like for 6,000 or 5,000 if this guy is get money 5 months, like for 1,000 for 1 month, they 5 months from wage loss plan, so that including the 5,000 is put on box 14. Or they just, then if in this case, then the premium that employee paid, they can subtract here on 10130, subtract here. Okay, wage loss contribution is here. That's the premium you paid. And then you can, that's for reference. Okay, for the reference, they paid this one. Then also there's some guy is they could put the line 2. If there's not including, if that's 600 is not including box 14, they just directly subtract. That contribution. They put line 2. So line 2 is other employment income. Okay, other employment income on line 2. So they could if there's a wage loss income is including your T4, then it's come to line 1. So if not, then you just put on line 2. Okay, that's the two-way. It's kind of confusion. I'm going to explain to you, but it's not including our final exam. Okay, because this the field case is not a lot of people. Okay, so line 2. So line 2 is other employment income. Okay, other employment income. Any employment income is from line 2. So that's line 2, other employment income as including your foreign employment income. Like it says, if you have employment income in USA, if in employment income in Philippines, then you just put over here on line 2, not line 1. Okay, line 1's only connect to T4 because your foreign employment income, you not get T4. Okay, T4 is only for Canada. So if you any employment income is you're not getting on T4, then it comes to T1. Okay, comes to T1. So then other employment income is line 2. Okay, and line 3. Line 3 is old age security. Line 3 is old age security. Okay, old age security, that means when you over 65. Over 65, okay, and a Canadian, you live in Canada for 10 years, okay, and then you live in Canada for 10 years, then you get old age security. So old age security full amount is you lower income and you live in Canada 40 years after you turn to 18. So that full amount I think is 600 something for every month. Okay, CPP and QPP contribution on line 4. So CPP, QPP on line, because we are benefit, CPP and QPP benefit, because we are every month now, every paycheck, every year, we contribution to CPP. When we get retired, so you get money from your CPP. So in this case, you get money from your CPP, that's the pension, Canada pension. So that pension, you still need, your pension, you need to pay the tax, okay? You need including your T1. So on line 4, your T1. And disabled benefit. So if people disabled, they get disabled benefit. So that line 5 Line 5 is other pension income and the supplementary. So line 5 is other pension. What is other pension? Other pension is a foreign pension, okay? Because the line 4 is, line 4. Line 4 is Canada pension, okay? If you get another pension, is line 6, okay, not line 4, other pension here, line 5. Other pension is line 5. So line 5 is, other pension that you got the foreign pension. Some people like my peasants, they have they collect a pension from China, right? So that's the other pension. Then other pension is line 5. So elected split pension amount on 6. So elected split pension is this split pension is only for Canadian pension. You cannot split the foreign pension. Okay, split pension is for what? Is just for Canadian. So for the Canadian, they are senior. They give their special. They give their special. The special advantage for that. For the senior guy. So the senior, they can split the pension between two couples. The maximum amount is 20,000, right? So the split means like for example that the husband, they got more pension. They have a highest pension. Highest pension is they have a pension is 40,000, and also they have another income, another investment income or another income, another income. So the total income is 60,000. So we know 60,000. Then you pay you pay 20.5%. You on the next bracket. But your wife, if the wife is only get 25,000 or some even 30,000 or something, then even 30,000 something. So that then in this case, the husband, they can split 20,000 to the wife, then they reduce him, okay, or 15,000, or the 15,000 to the wife. The maximum is 20,000, okay. So they can transfer that split. That means transfer 15,000 to the wife. So the wife, if wife is 30,000, then the wife get 15 here, get 15,000 on here. That's elect. That's line 6. They add 15,000. So the total will be 45,000, right? If the wife is 30,000, then they add 15. Then the wife is 45. So 45 is still 15%. But the husband is better. So husband, if for husband is 60, then they just deduct the 15,000. 15 for husband, deduct 15 is here. Line is page, next page. Okay, next page is the deduction. The deduction is where it is. This one is pension adjustment. Is not that.
Line 35.
Line 35 is line 35. Yeah, line 35. So the husband will put the line 35 is 15,000. So 15,000 because total is 60. Then they deduct 15,000. Then they come to 45,000. So 45,000. Then they just pay the 15. Pay the 15% tax, right? Pay 15% tax. This is good. Pay 15% tax, then this good. And also, probably husband will 45 will qualify because net income is low. Net income is come to 45,000. So possible 45,000 is qualified for some social social benefit. 60 is not for social benefit, but 60 is too high. So in this case, sometimes your split pension income is good, okay? Split pension income is good, but depends, okay? Depends. It depends. Sometimes if you, like say, if the person with lower, if person with lower income, then they qualify for social benefit, but it's split. You add up income here. You add up income here on line 6, and on line 6, then they are lost qualify. They lost qualification for benefit, and still the husband still not qualified for that benefit. That's for social benefit. Then in this case, you rather than pay more tax and get the social benefit. Okay, so this one is a skill. You need that people we need to know exactly. Got that's you know, you have get maximum benefit for the couple. But now I'm not go detail with that. If you have a go to detail, you need to know how much old age security is minimum income, maximum income, then how much is a supplemental federal supplemental benefit is how much. So it's kind of this one, and lots of benefit. They have threshold, right? So you need to know. Then you decided to split your pension amount or not, or how much you split, because the maximum is 20,000. You could split 10,000, or you can split 15,000, 12,000, something like that. So the maximum. Okay, so maximum is 20,000. That's lots of skill for a senior, but for us, we don't have that benefit. Okay, for employment income, you're not able to split that. Okay, so next one is so line 7 is I said universal child care benefit. If you still collect the universal child benefit, that's taxable. You need to put line 7. Okay, so that's UCCB amount for designate for dependent is you put here. So for the eligible dependent, then I'm going to talk next week. So now I'm not talking to, and this one is also, you know, also in on the left, on your left. So on your left is it's reference number. Okay, on the left is reference number. Employment insurance benefit, that's EI. When you collect the EI, then you get the T4E from the Service of Canada. So in this case, you need to report. Okay, you need to report your you need to report your income. So EI income you need to report. Okay, is including your T1, and this one is the next line is 11905 is maturity EI. So it's a reference number, okay? Reference, that's total EI you get, and the maturity EI, parenting EI, something is on this slide, okay? Line 9, taxable, line 9 is dividend, okay? Line 9 is dividend. That's a taxable amount of dividend. Dividend, I'm going to talking about dividend, okay, in investment income. Now you just know dividend, all the dividend income is on line 9, okay, on line 9. So dividend, they have eligible dividend and non-eligible dividend. When we, other than eligible dividend, so they are both. Any dividend is report on line 9. Line 1200 is online here. So now we just put aside because we have we're going to discuss detail in investment income for dividend. Now you just know here, okay? Line 10 is interest. It is also interest. Is also investment income. Okay, if you get T5, that's called interest from bank. So it's on line 10. So on line 11 is partnership income. So this partnership income is non-active. It's non-active partnership. So non-active partnership is kind of non-partnership income is kind of share, because you put money in that company. Okay, what is non-active? Non-active is you put money in that company, but you are not involved in their company's business. Okay, you only get money is because you have a share. You have a share, you put money, you investment, put the money in that company. But the company, you're not involved business. You do anything, you got nothing to do with that company, only the money. So this one we call the non-active partner. Okay, so what is active partner? Active partner is you put money in that company, and you also do some management, you work at it in that company. You work at the company, you do some management or do some service in that company. You involve that business. Okay, you involve that business, and this one is, if like this, then the income is for self-employment income. Okay, it's like you're running small business. You put money in there, then you actually do some work there. So that's the self-employment income, that income. But if you are not involved in that business, you only put money there, then every year because you are a shareholder, then you get money from that. Then this one is on line in this line. So line 11, okay, that's net partnership is on line 11. So line 12 is a registered disabled saving plan income. So that's, I'm not going to go through this one, okay? So line 13 is rental income. So for the rental income, that's the net income, okay? Line 13 is net income. So total income is 12599. So net income is they allow you subtract your expenses, like you paid your rental income, like you paid property tax, you paid insurance, property insurance, you paid utility, if you paid the utility, or if you paid the condo fee, and if you borrow the money from then you have mortgage, right? The mortgage interest, okay, the mortgage interest, or you borrow the money from somebody else, the interest that you paid, okay, only interest you paid. So, or you maintain this, okay, you're doing maintenance, then there's something like that. Then they allow you to deduct, okay? They allow you to deduct to deduct that one. Then the net income is on line 13. The net income on line 13. So when you do the rental property, they have a form here. So how you find the form is you double click on here, okay? You double click on that's the 0, then they give you a form. The form is T776, okay? The T77, you fill T776. So how do you fill T776? First thing you need to look up that. You need to look up that here. You need to look up that the left. Everybody look up my mouse. Is anybody look at my mouse?
Yes.
Okay, so the mouse, they have a T3, T5, T4, T here, that's T. So I'm looking for the rental, okay? I'm looking for rental. Rental is, because if you don't know the rental, okay? In rental form, you just double click on line 13. So double click on line 13, they will say T776. So the T776 is the rental form. Then you click close, then you for looking for T776. So T776 is here. If you don't have a T77, so then I got T776 here, right? So if you don't have a T776, so how you find the T776? Everybody look at my mouse. So my mouse goes here. What is here? Tell me, what is that?
Forms.
That's forms. That's any forms you need to find out is like this. So you click on forms. You click on forms on the left side. Left side is federal form. On the right side is provincial forms. See here, right? Provincial forms. Left side is federal forms. For the rental income, we don't need to fill provincial form. So we only need the federal form. Federal form T776 is here, okay? Because I already have T776, so so T776 is already there, okay? Then you can find out T776 here, T776 because I already have T776 So if you need T776 then you select it. Okay, this one is you select it. Then you kick kick that down arrow. The down arrow is here. That means you got the T776 here. Then you down. You kick that okay. Then you got the T776. What is T761 is your one property. If you have more than one property, right? So you have a rental house, you have a 2 rental house. So the 1 rental house is T7761. Then you have a second one, then you click on this one. Then you fill one by one, okay? So you fill one by one. So that for this one is that's very simple. If somebody interested for the rental property, then I can rental property pretty much is simple. So I can explain to you, but I said this one is definitely not including my it's not definitely including my final exam. So if somebody really want to know, then I can give you 1 hour or 1.5 hours to explain that one. But it's pretty easy, okay? It's simply pretty easy. It's like it says, the total part 3 is income, okay? Income, you put that income, the total rental income. And the part 2 is expenses. So there's kind of expenses, advertisement, okay? And the insurance, the house insurance, then the office expenses if you have, okay? Interest and the bank charge. Interest is you have a mortgage or something. So that's lots of things here, okay? That's pretty simple, okay? Pretty straightforward. So if you still want to know, or if you have some questions, just let me know, okay? That's not definitely not including my final exam. So this one is so this one's a rental property, okay? So when you have a rental income, you need to separate for one by one. One T776 is only for one property. Then you have a 2 or 3 you need to fill out, okay, separately. So the net is line 13. So line 14 is capital gain, taxable capital gain. Okay, so capital gain is for CRA, because we fill up T1. So T1 is we know T1 is for resident, right? For resident. So the resident is capital gain is the own taxable capital gain. The only half, 50% is taxable. Like for example, you sell your rental house, you make 100,000 money, but only 50 is taxable. So this as a taxable capital gain. Okay, when we come to investment income, I'm going to talk about that. Okay, because you is taxable capital gain is only half of capital gain, only half. If you make 100, then your 50 is taxable. So line 15. Line 15 is support payment. Okay, support payment. I need discuss. I need to give you a detail. Okay, for this one, for the details I give to you is means that's only once. So in future, I'm not explain that. But for now, I just goes very quick, like capital gain, like invest dividend or something is we're going to discuss in future in detail. So now I just very quick to pass it. But if I said I'm going to go give to you detail, that means only today. Okay, in future, you won't able to get any information on here. Okay, for somebody they missed class, for somebody you are missing class, so you are missing. Okay, you are missing. That's it. So for that support payment. So what is support payment? Support payment is there's two kind of support payment. Okay, is when there's taxpayer get a divorce. Okay, taxpayer get divorced. So there's the one part they need pay the ex spouse is support payment. So the support payment they have two parts. One is children support, child support. Another one is spouse support. Okay, so the child support in Income Tax Act, child support is not taxable. So when you have like for example, when you receive, okay, you receive support, okay, when you receive support, like 10,000 support, but 6,000 is child support. So you put 10,000 here, okay, you put 10,000. That no, sorry, I'm wrong. Okay, you put 10,000 here. Total is 10,000. Okay, total is 10,000 here. So the 10,000 is a total support payment. Then because we says 6,000 is child support, so 6,000 child support is not taxable. So only spouse support. So spouse support is here 4,000. So 4,000 is taxable. Okay, so 4,000 is taxable. Okay, so 4,000 is taxable because 4,000 is spouse support. Okay, spouse support, and these support payment, then also okay, then this one is your support payment received, but for the person they pay the support. Okay, for example, I pay. You are the man. Okay, you are the man. You pay support. You this one is for the wife. Okay, your wife you receive support payment, and for the husband you pay the support payment. So you pay the support payment is next page is a deduction allow you to deduct. Okay, so the next page. So next page support payment is on line 42. Okay, line 42. So the same thing. So if you pay line 42, if you pay 10,000, total is 10,000 support payment. Okay, then you only allow you to deduct is spouse support payment. So it's 4,000. So the child support payment you are not allow you to deduct. Okay, you cannot deduct. Okay, here. So that's 4,000. Okay, and also that the support payment, they need a written document. Okay, they need a written document. If you like they have a like that support payment amount, they have a written by court order. If you go to court, then the court order it says every year child support is 6,000, then that spouse support is 4,000. They have a written document or separate agreement, separation agreement. You are separate from your ex. So the separation agreement, they have a written document. Then you can do the deduction. Otherwise, you just discuss with your ex. Then you say you can deduct. It's not not qualified for deduct. Then the May CRA wants you to provide the support document. Okay, the May CRA wants you they want to see that. Okay, they want to see you they say ask you provide the document. And this is the one thing. Another thing, because deduction, this one is a deduction. Okay, this one deduction is very strict for, because deduction is already reduced from your income, right? Reduced from your income. So CRA set up lots of rules. So one rule is, is spousal. The spousal support payment, they could be deducted. That's the one thing. Another thing is you need the support document. Okay, so we come another one. So sometimes if you this support payment is the you can deduct, you qualified for deduct is periodically payment. Okay, not the ones, not lapse sum payment. Okay, not lapse sum payment, is periodical payment. That means and for example, is Amazon. For example, that's the owner of Amazon, and that guy is very rich. I think 2 years ago they divorced. Okay, 2 years ago they divorced from his ex-wife, from his wife. So that he paid 300 million, I think, something. I can't remember the big amount. Okay, the big amount. The big amount paid to his wife, ex-wife. So then for this one, he said it's one-time payment. So for 300 million is next. So in the future, I pay 300 million. So in future, you don't come to me. Okay, you don't say I need money or I need some support. Don't come to me. So 300 million is done. Okay, we are done. So don't come to me. He released their future liability. Release their future liability, then 300 is done. So in this case, 300 million is not deductible. Okay, it's not deductible. Anything, even there's 30,000 or 10,000 you paid for lapse sum paid. Lapse sum payment is for that your future release, your future liability, then they won't allow you to deduction. Oh, okay, they won't allow you to deduct. That's the rule. Okay, that's the one rule. Another thing is exception is like for some people they lost job. Okay, the husband, for example, the husband supposed to pay 10,000 this year. 10,000 is a child support, including child support and spouse support. But however, he lost a job. He lost job like for last month and last year is a pandemic. He lost job. Then he won't pay 10,000. Last year he only paid 4,000. Okay. Then this year he got job. Then he want to make up the payment. He has money. Then he want to make up the payment. So in this case, probably he left some payment. He gave you 10,000. For this one is yes, it's qualified. Okay, for this one, yes, it's qualified because they make up a payment. It's qualified. Okay, make up payment for last year is qualified, deduct. And also, there's have a question. For example, he paid 8,000. Okay, he paid 8,000 total because total is supposed to pay 10,000, but he only paid 8,000. He only paid 8,000. So the 8,000, then the CRA has a rule is 8,000. Your first thing is you subtract. First thing that's here 8,000. Okay, 8,000. The total is payment is 8,000. The first thing you need to subtract the child support. So the child support is 6,000. So only 2,000 you can deduct. Only 2,000. So that's 2,000 is we deal with spouse support. Okay. The same thing. Then when that the wife did receive it, the receive it is only 2,000 here. Okay. Only 2,000 on line 15. So you put 8,000 on 12799, then 2,000 on 15. Okay, 2,000 on 15. That's because when you got the payment, you have to first thing you have to subtract the child support. Child support is priority. Okay, is support then less. Then the rest is spouse support. So this another point.
I have a question. Sorry to interrupt, but the caregiver expenses, I will put it in a child care.
No. That's another one. So your child care expenses, right? That's child care expenses. Okay.
Yeah.
That's child care expenses is another line. Okay. That's the different topic. That's a support payment. The support payment is only that people they get divorced, and the divorced is that's ex pay you.
Yeah, so I will put it in a T778.
T778, yeah. So yeah, T778 is a child support. It's a child care expenses. So the child care expenses, don't worry. I'm going to talk in detail. Okay.
Okay, sure.
Talking
Thank you.
in detail. Yeah. So this is the topic I'm going to discuss because almost everybody here, we have a child care expenses. So now it's a child support. So for this one is support payment is for divorce. And the last rule, I tell you the support payment. Okay. Last rule for support payment is I'm not. So it's not there. The last rule for support payment is your payment is the payment must the payment give to your ex is you cannot see the specific payment. Okay, so the payment you could directly give your ex, or you directly through the through your boss, employer. So sometimes they through employer, then the employer to deduct the paycheck from the husband and then give to wife. Sometimes like this, okay? But your the husband, if they get a support payment, like they give money for the landlord, okay? They said for the landlord, I paid the rental. I paid for the rental, give to landlord. And this one is the wife, they cannot use that money. Okay, so because they already give the landlord, I cannot use money for that. Then in this case, is not deductible. Okay, it's not deductible. And but for they can say I don't want to rent this landlord, and I don't want to rent this house. I can take out the money to rent another one, or expensive house or less than expensive. That you have the choice. That means that the support payment you give to your spouse, give spouse support payment, then your spouse can make a decision to use that money. Okay, if the spouse cannot make a decision, cannot use that money, then it's not deductible. Okay, so for example, and then it's because if your spouse can and if you just give that money, your spouse can and use whatever he want. He can use, you give me 4,000, I can use this money for vacation, for for purchase my food, or purchase my clothes, or purchase my vehicle, or purchase my for purchase my vacation, whatever, traveling, or do my exercise, whatever. Okay, it's my decision. Okay, it's my decision. It's not your decision. If somebody they give you a support payment is his vacation, then you cannot use this money for something else. So this support payment is not deductible. Okay, it's not deductible. And also, if you receive that money, you not put line 15. You don't need to put line 15 because that money is not given to you. That's specific. It's a specific something use. Then it's not your money because it's not your decision, right? You cannot make a decision for that money. So make sure the support payment, that money, if you receive that money, it must be your decided to how to use that. Okay, you can use that for everything, whatever you want. Okay, whatever you even not use the money, I put in the bank. So whatever. Okay, it doesn't mean is your decision. If they just specify says, okay, I paid this money for your tuition, I paid money for this rental, then you cannot take that money out. That means you just he cannot deduct it, and you don't need to put income here. Line 14, line 15. Okay, so this is the one. Then register, and another one is line 16. So line 16 is important. Is RRSP. We know when you contribution RSP, then you can deduct from your income, right? So when you contribution RSP, you put line 33, 34, line 34. Line 34, your contribution RSP. So RSP is you deduct from your directly you deduct from your income. Like now, Aaron is 105,000. So if Aaron is contribution RSP is 20,000, then his net income is come to 80, right? 85 or something, 84 or something income. Right, so they can, when you contribution RSP will go into in detail. I just simplify here. So RSP is you just that's 20,000. If you contribution 20,000, then there's 20,000 on line 34. So on line 34, then that's deductions. Okay, that means the 20,000 you don't need to pay any tax on it because the deduction. Okay. So, but the the 20,000 when you withdraw 20,000. When you withdraw, it doesn't matter you retired or not retired. For example, you last year, you contribution 20,000, and this year you decided to use that 20,000. So when you withdraw RSP, then you need to pay the tax on it. Okay, you need to pay the tax, and the tax is on line 16. So you need to put tax. That's RRSP income. What RSP income is means you withdraw money from RSP. Okay, you withdraw money from your RSP, then you need to pay the tax on line 16. And also, like I said, when we learning RSP, then I'm going to introduce you use RSP money to purchase your new home. That means RSP home buyer plan. So home buyer plan is you use RSP money to purchase your home. So that money is kind of your borrow money. You borrow your loan. RSP is your loan. You borrow money from your RSP, then you just purchase your home, pay the down payment. So this money, you don't need to pay the tax, but you need to pay back. They set up 15 years. You need every year you need to pay back. So pay back, they set up a minimum, that's minimum payment every year. If you not pay back a minimum pay year, then the minimum pay year, that amount is come to line 16. Okay, it's come to line 16. So that line 16 basically is you withdraw money from your RSP. Okay.
I have a question regarding that.
Mm-hmm.
Like example, because I heard long time I have a friend we're talking about because they got the first home and then they use their RRSP.
Mm-hmm.
And then after that, she cut off remitting her RRSP. So what will going to happen that when you're doing the repayment, because you don't have any RRSP contribution?
Yeah, that means the first thing is he has money in RSP account. If you don't have an RSP account, you don't need you cannot pay the money for that. Okay, that's the first thing. That means you before in the previous year you contribution RSP.
Yes, I think that's happened. Yeah.
Yeah, if you're not contribution for you never contribution for your RSP.
Yes.
You don't have a money in there in that account. Yeah. So you don't have a money, so you cannot borrow money for that. Okay, that's the first thing. The second thing is he borrowed the money from her RSP. Then he has to do the repayment every year. Repayment, yes. If she like every month he need to repay every year. Okay, sorry.
Yes.
So if she every year he repayment is 1,000, then he won't able to only 1,000 every year. So she is not like a lot of money. Put the extra for RSP contribution. That's he need to pay 1,000 every year. If she has another money like 5,000 contribution, 5,000 money, then he can pay. First thing he paid 1,000 for minimum, and another 4,000 she can contribution RSP again. Okay, yeah. So that's the works. But if she don't have extra money, she only 1,000. So every year she just pay 1,000. That's it. So stop contribution. But 1,000 she need to pay back.
Yeah.
Otherwise,
sorry. Yeah. Go on.
Otherwise, he should put 1,000 on line 16. So line 16, that means he need to pay the tax on it.
Yeah.
Okay?
Yeah, because as what I understand, we're talking before about that. Like, so they bought a house, right? So they withdraw all the money in their RRSP.
Mm-hmm.
So then after that, they stopped already contributing. Yeah, so there's no any amount in the RRSP. So what will going to happen on that box for home buyers repayment?
Also, the home buyer repayment we will discuss in later. Okay, you don't worry. We discuss in later. In investment income, we don't worry. But he stop to contribution is okay. It's just like me. This year I'm not contributing my RSP. That's it. So you stop is your choice. But because I don't have home buyer plan, so I
Yeah.
don't need to pay back. But in your friend, he need to pay back. Even you are not contributing, but you need to pay back the minimum.
So you still
payment.
need to enter in that
You need to
in that box the repayment amount.
yeah, repayment amount give to that the financial situation, who is charge your RSP.
Oh,
So yeah,
okay.
you still need to pay, but this one is not deductible, right? It's just payback. It's just like a loan. You pay you pay back, repay that loan. Okay,
Okay.
it's
yes.
not deduction. It's not deduction. But if you are like your contribution 1,000, if it's contribution, then you can deduct here, line 34, deduction here. But if 1,000 is only you pay back, is repayment for a home buyer, well, 1,000, that's it. It's nothing come to 34. That's the 1,000 is that 1,000 is nothing to do with T1. It's only you repay. Okay, repayment.
Okay, thank you for the info.
Okay, so that RRSP. So for the RRSP, the income is you keep in your mind. RRSP is when you withdraw RRSP, you need to put line 16 withdraw. Okay, so that's RRSP. Doesn't matter you're retired or not retired. So RRSP you can withdraw anytime. Okay, you can withdraw anytime. But when you withdraw, you need to pay the tax. Okay, the government, they set up RSP is because they want you, when you work, they want you save money. When you get retired, you have money. Okay, you're not rely on the government. So because you save money, okay, you save money, then you're not rely when you retired, when you're getting older, you're not totally rely on the government. So then also now you save money for your retirement, then they just don't, so this money don't pay the tax. So sometimes when you're working, your income is high, right? So income is high, you save tax, it's good. Then when you retired, the people they getting retired, their income is low, then they withdraw RSP, they pay lower tax rate. So in this case, there are lots of people interested. Okay, so when we come to investment income, then I also give you extra information for you to decide it. If you have money, like you by the end of year, you have 6,000 saving money. So you have a choice. You contribution RSP, you contribution RESP, or you put money, you contribution your TFSA. TFSA is tax saving account. Okay, so these are three things. What haven't you decided? Then I will give your advice. Then this advice, you won't get anything. You won't get anything somewhere, because when you come to the bank will tell you contribution RSP, you save tax, blah blah. Okay, because you contribution RSP, they got commission, and the RESP the same thing. Then TFSA is same thing. Okay, so I would give to you for my student. I will tell you every item they have an advantage and they have a disadvantage. So it's depend on your situation, depend on your personality. Okay, even depend on your personality, and depend on your financial situation. That you can make decision. Okay, you can make a decision. Then I will tell you. Okay, I will tell you when I close to that investment income. Okay, then I will put the 3 items together. Then if I have money, then how I put that money in which area. Okay, that's depend on your financial situation and depend on your personality. I will tell you, depend on your personality. Some people they organize. Some people use money very quick. Some people they organize. They are just they have a plan. So if you have a plan, then you put money in where is better. But some people they just disorganized. If they have money, they just spend very quickly. And like one of my friend, and even for my husband, then he has lots of idea. If you have money in the bank, he know. As long as he knows, he has lots of the idea to spend that money. Okay, very quick. So the tech, and another one is line 17. So line 17 is other income. Other income is, when the other income is could be any income, not including that. Okay, so that's the best thing is when the people collect the money for CRB, right? The Canada Emergency Recovering, the Canada CREB, right? That's for COVID. The COVID is Canada Recovering Benefit. That one is last year, and in 2020 when you receive that money, I believe is 2,000 for 1 month. The 2,000, that money is other income in line 17. So line 18, I'm going to explain to you line 18. So line 18 is taxable scholarship, fellowship, bursary, and artist product grant. So when we got student return, when we have a student return, I'm going to teach you, because with student, you have a scholarship, your bursary. So I believe everybody got a bursary here, right? From East West College. So some bursary is taxable, but some is not taxable. So line 18. So line from 29, line 25. So line 25 is self-employment. Okay, self-employment is line 25. So line 25 is net, also is net income. So net income is first thing is business income. So when you carry your small business, the income is here. Then when professional income is like me, because I got teaching, and it's also self-employment. I got professional income, and the farming, fishing, and the commission. Some commission guy, okay, real estate, realtor. They are self-employment income, so they are commission income. Okay, there's lots of things. So for the self-employment income is T4002. Okay, you can check this on CRA website. The first thing, and second thing is if we have a time. If we have time, if some student is interested, then we can discuss for that. Okay, we set up a special day for that. If there's if the student interested, then this student you can come. You can stay in class, but the other student, if you're not interested, you can leave earlier. So so I think probably is on 3rd week. So the 4th week we are prepare for final exam. For 3rd week, for that one, we will know. I will know. For 3rd week, I will know we have a time or not. In this case, I can set up 1 day, and then we can discuss. Okay, and like after break, after 10:15 break, then I said okay. and I'm going to discuss this one. So if some student they are not interested, you can free to go. Okay, you're free to go. You leave early dismiss. Then some student you stay here. Then I just explain to you. That's the self-employment, but definitely self-employment is not including my final exam. Is not including my course. Okay, and also these the important things until line 25. So until line 26. So line 27, 28, 29 is the WCB. Line 27 is WCB. That means you get T5007 from your WCB. It's work compensation benefit. Like I said, if you get injured from your work, so you get injured from your work, you get money from WCB. Okay, so WCB the premier. WCB premier is your boss paid, employer paid. You are not paid. You are not paying WCB. Okay, you are not paying WCB, but your self-employment probably you pay premium. Okay, if you want to get WCB, you pay the premium, then you get benefit. Then you can deduct there. Social assistant payment. If you have a social assistant payment, then there's a 28. Social assistant payment. Then the federal supplemental, the net federal supplemental paid is also is for the, that's I said, is for the lower income senior. The lower income senior, because OAS, old age security, is every month is 600 something. So 600 something is not enough, 600 something is not enough if the senior, they don't have another income. They don't have RSPs. They don't have RSPs, okay? Just hold on, okay? I have an emergency call. Okay. Hello. 那个，我星期五下午2点45分有取消，你要开立过来吗？星期五下午2点，星期五下午2点45可以的。那我就这个星期五哈。Canada pension income, because they never work. They never work, so you never contribution for CPP. So of course they never get. You cannot get any money from CPP, and they don't have RSP account. So in this case, then the government will give you a federal supplemental debt fund. So in this case, the government they guarantee you put enough food on your table. They put your property clothes on your body. So they give you money. So it's depend on your income. So if income is very low, then you get maximum federal supplemental. So it's match 100,000, about 1,100 average. Okay, 1,000 at least. That means when you get retired, you at least you 100 guarantee you 1,100 every month. So if you get it, then this one is the CRA will issue that T4A to you. That is federal supplemental. Then you put over 29. Okay, that's basically it's basically all the income. All the income you need to report. Okay, all the income you need to report. And also I have added there are 5 minutes left. I have something to tell you, because yesterday, do you remember I said for some for some job, like for babysitter, for the babysitter, then I said some babysitter is employment income, right? Employee. So if your babysitter is employment income, that means you get T4. Okay. Do you remember that Alina? Yesterday I gave you an example. Is Alina. Alina, he goes to a parent's house. He do the what the parents did ask her to do. So in this case, Alina is employment. So if Alina is employee, then by the end of the year, then the parents will give her a T4. When he has a T4, then he report that income is on line 1. Okay, on line 1. But if Alina, they running day home. They're running day home at her house. Then he take care of the neighborhood, the children. So for this, the day home is self-employment. So the self-employment, then he reported his net. She reported her net income. So the net income is allow her to deduct some expenses. So that is on line 20. Okay, on line 20, that's self-employment, on line 20. But I said another case is, for example, is for Cindy, okay? Cindy, he just occasionally to take care of baby, is her neighbor is just twice a year, or for five times a year, to send 5 nights of year to send the baby to her house. Then she just charge some money. Okay, in this case, that money is not self-employment because she is not running day home, and it's just occasionally. It's 5 times. It's not lost very big amount. And also she is not go to the parents' house, and not employee. She's not getting T4. For in this case, she report that it's a casual job. I said it's a casual job. So for this case, for example, if she get 500, for this case, the 500 goes to line 2. Okay, goes to line 2, that's casual job. The same thing is when you cut glass. When you cut glass, when you shovel the snow for your neighbor, then you get paid for that. Then it's you put line 2. Okay, you put line 2. You are not running business. If you're running business, like especially you got and in the summer you go everywhere, then you cut glass. Then it's self-employment. Okay, self-employment is here. Then you can deduct expenses. You can deduct gas because you're running to every house. You deduct gas, and also probably you can deduct your equipment. For lawn mower, okay, lawn mower, it deduct. Then same thing is shovel snow. Then if you just running business, you especially shovel snow. You shovel snow for the whole season, right? It's not for one house, it's for lots of house. So this one is self-employment. But you just occasionally shovel the snow for your neighbor. It's just get 500 something. So is this one, so 500, you don't need to deduct everything. You don't need to deduct the expenses. You just 500 for the line 2. Okay, so the line 2 is a casual job. If you know, if you don't know what is including your line 2, if you don't know what is the income, you don't know where you put it. So possible is line 2. Okay, so line 2 is including lots of things. If you don't know line 2, then then you have a choice is you go to then you go to the 5,000 G guide. So the yesterday, right? The yesterday I give to you the guide. You can check on the guide. Just hold on. You can check on the guide, and there's 5,000 G. Where I put 5,000 G here? Okay. Need a quick go through this one. Oh my God, I closed that.